Welcome to the deep dive. We're here to cut through the noise and give you the insights you really need.
Get you properly informed.
Exactly. Today, we're taking you inside a pretty complex world, looking at financial strategies. Stuff that, if you understand it, can give you a real edge.
Especially in markets moving as fast as crypto.
Right. Think of this as your shortcut, your way to get what's really going on behind the headlines, specifically with companies adopting Bitcoin. So our main topic, Bitcoin treasury companies. And we're going to focus quite a bit on MicroStrategy, MSTR.
The big one.
The big one, yeah. These companies, they operate by holding, massive amounts of Bitcoin on their balance sheets. Michael Saylor, obviously, is the name everyone knows there.
He's definitely the champion of that strategy.
But look, our goal here isn't to predict failure or anything like that. No. This is about risk analysis. Pure and simple.
It's crucial.
It is. Yeah. Understanding how these, unique structures could become vulnerable, especially when the market gets rough.
Like designing an airplane you mentioned.
Exactly like that. You stress test everything. You look at crash scenarios, not because you want it to crash, heavens no, but to prevent it, to make sure it can survive.
And this analysis, it's really thorough. It comes from Matthew Crowder's Bitcoin University channel. The specific piece was called, "Do I Want MSTR to Fail?"
Right, and it gives a really solid framework for taking these things apart.
It really does.
So what are you going to get out of this conversation? Well, by the end, you should have a much clearer picture of how these companies actually work.
Yeah.
The mechanics.
And the potential weak points, these attack vectors that maybe hedge funds could use.
Yeah, and the bigger questions, too, about ownership and control.
Yeah.
That's huge in the digital asset world.
Always is.
We'll unpack how they raise money, how they try to stay solvent, and how they might fight back against these hypothetical attacks. Okay, let's dive in.
Great. So what's really interesting is how these companies like MicroStrategy use their balance sheets. They leverage them to get and hold just enormous amounts of Bitcoin.
And MSTR, under Saylor, they really set the template, didn't they, for corporations buying Bitcoin?
They absolutely did. And Crowder's analysis really digs into the nitty-gritty, how they get the capital, how they manage financial stability, and crucially, how they might defend against market pressures.
Especially from, let's say, sophisticated players.
Yeah.
Hedge funds, for instance.
Precisely.
And Crowder outlines this hypothetical attack. It sounds quite plausible, actually. You have hedge funds maybe shorting the company stock MSTR, let's say.
Right. Betting the stock price goes down.
While at the same time, they go long Bitcoin itself. They buy Bitcoin directly. So it's not just betting against the company. It's more complex.
Oh, much more. It's a specific strategy. The goal is to squeeze the company's market net asset value, the MNAV.
Okay, MNAV. Break that down a bit.
So think of MNAV as how the market values the company compared to the actual Bitcoin it holds, its underlying assets.
Got it. Market perception versus reality, almost.
Kind of. And if the attackers can push that MNAV down towards parity, basically, pinning it close to 1.0, well, that causes a big problem.
A roadblock, you said. So if their market starts valuing the company at basically just the price of its Bitcoin, or maybe even less, what does that actually do?
Well, if MNAV stays at 1.0, or worse, goes below it, it makes it incredibly hard, maybe impossible, for the company to issue new shares.
To raise more capital.
Exactly. To raise capital to buy more Bitcoin. Because why would an investor pay a premium for the stock?
Right. If they could just buy the Bitcoin directly for the same value or less.
Precisely. Why buy the wrapper if it costs the same or more than what's inside? That fundamental valuation mismatch is the vulnerability Crowder really focuses on.
So that MNAV compression, it stops them buying more Bitcoin, potentially drains their cash if we hit a nasty bear market.
Yeah.
And worst case, it could force a restructuring, maybe even liquidation.
That's the extreme end. Yeah.
And then the attackers, the ones who shorted the stock and bought Bitcoin,
they could potentially step in and buy the company's Bitcoin on the cheap, maybe through distressed debt deals or getting preferred equity. It's a potentially very effective strategy.
Clever, maybe ruthless too. So how do these companies fight back? What are the defenses?
Well, there are a few mechanisms. One strong defense is having a really solid operating business, something generating consistent cash flow.
Okay.
If a company has good revenue streams, it can use that cash to, say, buy back its own shares, supporting the price, or even just buy more Bitcoin directly with its earnings. That can fight off short attacks.
Right, but let's talk about MSTR specifically. Does its operating business, the software side, actually generate enough cash flow to be a real shield, given how massive their Bitcoin holdings are now?
That's a key point Crowder makes. MSTR has an operating business, yes, but its cash flow is relatively small compared to the sheer size of its Bitcoin stack.
So not really a major defense line in itself.
Probably not significant enough on its own, no. Another defense mechanism is access to capital markets, debt, preferred stock.
Okay, borrowing money.
Right. If a company has good credit, strong relationships with lenders, maybe it can borrow money during tough times to counteract that market compression. Buy back stock, shore things up.
That sounds logical in a normal market.
Yeah.
But what about a really severe bear market? We've seen liquidity just vanish.
Exactly. That's the critical caveat. In a real crunch, liquidity dries up fast. Getting new loans becomes incredibly difficult, almost impossible sometimes.
Especially if you're already heavily leveraged.
Absolutely. So yes, these defenses exist on paper, but how effective they are, it totally depends on the market conditions, on sentiment, on available liquidity. It's a completely different ballgame when everyone's running for the exits.
Okay, so we've got these vulnerabilities, these potential attack vectors, and defenses that might not hold up under extreme stress. It's probably not surprising then that Crowder's analysis got some pushback. People accusing him of, I don't know, wanting MSTR to fail, rooting against them.
Yeah, he addressed that directly. He strongly pushed back on any idea that was schadenfreude, wanting to see someone fail.
He said it's just risk management.
Pure risk management. He keeps coming back to that analogy of the aircraft engineers, thinking through every way a plane could crash.
Not because they want it to, but to prevent it.
Precisely. To build a more resilient system, ensure survival.
That's a really important distinction to make. Now, some people watching his analysis actually suggested other ways these companies could survive. Things like borrowing directly against their Bitcoin holdings or using zero-coupon bonds.
Yes, and it's interesting how Crowder responds to those ideas. He sort of dissects them and shows why they might not work so well, especially when the market's under stress.
They sound plausible on the surface.
They do.
Right.
But he argues they become much less effective, maybe even impossible, when liquidity tightens up and everything's heading down. Like borrowing against Bitcoin often needs a lot of collateral, way more than the loan value.
And that collateral could get liquidated fast if the price drops sharply. Margin calls.
Exactly. And zero-coupon bonds, they have their own issues. Who wants to buy long-term debt with no interest payments from a potentially distressed company in a downturn? Market appetite might just not be there.
Right, okay. So this brings us to something else interesting, a philosophical point raised by a commenter, Pedro Spencer.
Ah, yes, the purists versus the strategists.
Yeah, he contrasted Bitcoin purists, people who are all about cold storage, self-custody, the not your keys, not your coins idea.
The true bearer asset concept.
With corporate strategists like Saylor, who see Bitcoin more like, well, a financial tool, a strategic asset on a balance sheet. Pedro argued, Bitcoin is a tool. Wealth creation is a strategy. MSTR outperformed BTC itself by being aggressive and pragmatic.
It's a common argument. And Crowder, he doesn't maybe directly engage with that specific comment in depth, but his overall analysis pushes back subtly by constantly emphasizing that ownership and control are paramount, especially when things go wrong in a crisis.
They brought up history, didn't they?
Yes. FDR's Executive Order 6102, the U.S. government seizing gold from citizens back in the 30s.
Wow, yeah.
It's a stark reminder, a historical warning sign for anyone thinking about keeping their Bitcoin with a custodian, no matter how clever the corporate strategy seems.
Because a true bearer asset.
By definition, it's owned by whoever holds it, physically or digitally with the private keys. No third party needed, no permission required.
So, boiling this all down, what's the key message for you, the listener? Crowder's main point seems educational.
Absolutely. He wants people to realize that, okay, MicroStrategy led the way, but most other companies trying this are not MSTR.
They're trying the playbook maybe, but
they often lack the same operational strength or the market access or just the sheer scale MSTR built up. It's not easily copied.
So you need to look under the hood yourself.
Definitely. He really urges viewers, understand these terms, understand market net asset value, understand capital structure, understand Bitcoin yield before you even think about investing in these kinds of companies.
You had that great quote.
Yeah, the old saying, what the wise do in the beginning, fools do in the end.
Meaning, get informed first. Don't just follow the crowd later when maybe the risks are much higher or less understood.
Exactly. Understanding these dynamics is your best protection.
And that really is the core insight, isn't it? Real risk management, it's not about being negative or pessimistic. It's about clarity. It's about making informed choices.
Looking past the surface level stuff.
Yeah, understanding those structural vulnerabilities, especially when times get tough, when that liquidity disappears in a bear market. We've talked about MNAV, capital structure, Bitcoin yield. Why knowing these things is just essential before you put money in.
And it's telling that Crowder himself, despite knowing all this complex financial engineering inside out,
What does he do?
he just dollar cost averages into Bitcoin and keeps it in cold storage.
Simple as that.
His logic is straightforward. Bitcoin is a bearer asset. There's no counterparty risk if you hold it yourself.
You can set anytime, anywhere, no permission needed.
Right. Weekends, holidays, doesn't matter. And critically, there's no one ahead of you in line. No senior creditors, no preferred equity holders in some complex capital stack.
Explain that capital stack idea again quickly.
Think of it like a queue. If a company goes bust, the capital stack dictates who gets paid back first. Bondholders, then maybe preferred shareholders, then common stockholders are last.
But with Bitcoin, in your own cold storage.
You are the front of the line. There is no line above you. It's just yours. No prior claims. True ownership.
Which leads us perfectly into our final thought for you to chew on. If ownership and control really are the most important things in a crisis in history, like that FDR order seizing gold suggests they might be, then what does that mean for how you decide to hold your assets? Especially in this world of, constantly evolving financial engineering around things like Bitcoin.
What does bearer asset truly mean to you? When you weigh up counterparty risk versus potential gains from complex strategies, when you think about needing permission versus acting freely?
It's a powerful question, something to really reflect on as you navigate your own path in the world of digital assets.